Hello, fellow traders. 'Tis I, TheRumpledOne, coming to you on Monday, August the 21st. The year's 2023. Let's talk trading. Sometimes you're smart, sometimes you're stupid. These videos are for educational purposes only. Your results may differ from mine and different for Walmart. Walmart, I was talking with Seeker after you dropped off the line on Friday, and we've been doing some smart things and we've been doing some stupid things.
Welcome to the real world.
But you know,
That's
the
full of it.
question is that what's the reason we do stupid things? I mean,
Yeah, all I can think about, when you brought the topic to me earlier this morning, and the reality is, I kind of look at smart as being wise and being foolish. I kind of like to use those terms instead. But the reality is, I think every single person in the entire world is wise about certain things, and every single person in the entire world is foolish about things. And I think that fits with trading so well because, there are certain things that we do that is so wise or so smart. We do the right things at the right times, and and it just all seems to click together. And it doesn't, and again, I say this all the time, but it's worth repeating, and that is this: doing the wise thing or the smart thing does not mean that's the outcome of the trade. You can do everything right and be very smart about it, play with it play the trade perfectly, enter the trade perfectly, manage the money perfectly, manage your risk perfectly, gotten out of the trade perfectly, and taken a loss. That's the reality. And so you were smart. You were smart because you did what you were supposed to do. And I would define that in trading as being wise or being smart is doing what you're supposed to do. And stupid or foolish is not. And I don't care. Here's the reality. You could do every single thing wrong. You can get into the trade too early, get into the trade too late, manage the money incorrectly, take risk that you shouldn't have taken, and the only thing that you did right was that you got out of the trade when you got out and you won. That's still, in my book, it's still being foolish because the risk that you've taken now is so much outweighs whatever little profits you made on that one little trade. It's just not worth it because in the long run, what's going to happen is you get away with it once, you get away with it a second time. Next thing you know, you've developed a habit, and now what's going to happen is, it's sort of like the old expression, the rooster's going to come home to roost.
hmm.
And what's going to happen is when that happens, you're going to get slaughtered. It's just a question of time. You're going to get slaughtered. And that to me is, my definition of being wise and being, or wise and smart versus foolish and, foolish and stupid. Yeah. And we have to keep that in mind. And so what are the smart things to do? What are the foolish things to do? And for me, like today, and I told you this, hero, right from the beginning of the day. You called me when I'd already been sitting at my desk for about an hour, or pretty close to it anyway. And he said, well, looking at the chart, you should have made your money already. And I said, nope, I haven't taken a single trade. And part of it was because what happened was I kept on seeing the trades too late. And I was not pulling the trigger because I would be getting into the trade too late. And I missed some really good trades because I didn't pull the trigger in time. But, and I consider that to be smart, even though I did. Here's a shocker for everybody out there listening, knowing how many trades I take a day. I have not taken a single trade. I am 3 hours into my trading day at this point. Okay, I'm on my third hour, so 2.5 hours in, 2 hours and 40 minutes in, and I have not taken a single trade. And part of it was because in the beginning of the day, I just kept on missing the trades, and I was smart not to jump in, and basically trying to catch what I call catching a falling sword. In other words, the move has taken place, and now jumping in because the move has taken place. And my trading experience has taught me that when I do that, I usually get, I get sliced up because, what happens is that because of my method, because I'm looking here to only make 2 or 3 pips, I'll wind up getting at the high when I was, or actually I get in at the high when I was taking a long, and now it's going to go and regress and go back down. And next thing you know, I'm in one of your famous things that you call a point of inflection on the chart, and you get, and I would get slaughtered. So I was smart because here's why I became smart. I did not take the trade. I didn't jump in. And the second thing that made me smart today was that I recognized, and Hero, you can go and back this up. I went and said, after we got on the call, and we were talking for maybe 15, 20 minutes, maybe a little bit longer, and I said, you know what, I'm not taking any trades today. I'm just not into it. It's just not happening. I'm not seeing things quickly for whatever reason, long weekend, whatever it may be, it just, I'm just not seeing it. So why am I going to go and risk money, when I'm not at the top of my game? So for me, being smart today was recognizing that I'm not at the top of my game. Just don't take the trades. Why go and put a risk out there? Yeah. If I look back at the chart, if I would have gone and taken this trade, this would have been a relatively easy day. I mean, only 55 pip range for the day, but there was so many really nice places to get in. I could have easily made core. But if I'm not thinking straight, or I'm not just reacting correctly, that would be foolish or stupid to go and jump into those trades.
Yeah.
That's my 2 cents on it so far.
Yeah. The thing I think about being stupid is you just break your rules because you think you see something and you outguess yourself. It's not a second guess. It's just you're just outguessing yourself for whatever reason you choose to. And that's just really can be really detrimental.
Yeah, absolutely. It can put you into a hole pretty badly where, what it does is if you're not going on top of your game and you go and take trades because you are not seeing things. Let's take it from another perspective. Let's say your rule book says that you need 3 things in order to go and get into a trade. Okay? And let's say the market just doesn't smile upon you and constantly gives you 2. And some of those trades actually turn into what would have been, you were smart and you didn't take the trade, but they would have turned into winners. And then you start doubting yourself and you start saying, well, I really don't need that 3rd rule. Look what's happened every single time. 2 times in a row, 3 times in a row, maybe even 4 times in a row. I didn't need that 3rd thing, and you say, okay, here we go. Okay, I got item 1 checked off. I got item 2 checked off. Okay, item 3's not there. You know what? It's worked every other time. I'm jumping in. And then for me, in my trading experience, that's when I get bulldozed over. Just like I just get creamed. And it's like, dude, you didn't follow your rules. How smart was that? And then you say, well, I could have won all those other times. Yeah, you could have, but that's not the game you're playing. You got to play with the rules that you set out. Because at least in my humble opinion, the most important thing is following your rules. Now, if it turns out that maybe the rules aren't working, well, do the analysis. Don't just go and do it on the fly while you trade. You don't go and do the analysis while you trade. You do the analysis before you ever take a trade. Maybe that is a rule that you don't need to have in place because long term it turns out that, it really doesn't protect you as much as you think it protects you. Well, do the analysis. And what do I mean by the analysis? You can either go and back trade it, and I don't recommend that because you can't see all the movement. Forward test it. Take a day, 2, 3 days off, 4 days off, and just go and forward test it. Instead of going, let's say your normal trade is that you go and trade is 1 lot. Well, going forward, test it by trading, one mini lot or one micro lot even, and just test it with one mini or one micro, and forward test it and see if it's really true or not. And then if you need to amend your rules, amend your rules. And that's okay. If you don't need to amend your rules, then maybe it reminds you of why you had that rule there in the first place. But don't just okay, I'm right here in the middle of my trading day, and I'm gonna go and jump into this because it's worked 3 times in a row today. Therefore, it must be. Well, no, it doesn't must be. It's just, the market is, in a lot of ways, a lot of guys out there will go and say that, that the market is nothing more than random motion to a stated goal, and that's how they look at the market. And I kind of tend to believe that. And you got away with it. And you could get away with it. But long term, if that rule is put in place and it's a valid rule, you're not going to get away with it.
Right. Yeah, well, as far as being stupid, it's one of those things where, at least in my case, I have so much quote unquote trading knowledge in my head, and I can see things, and gets back to I can make up any story. It's like before we started the video, I guess it was maybe last hour or something, I said, hey, you know what? There's a negative divergence with indicator 2, and you're like, what? What's that? And I said, yeah, then I started explaining, yeah, that's something I learned way back in my equity trading days, where I'd be looking for positive and negative divergence. And so I could easily say, well, you know what? We should take a short here because of this, but I'm not trading divergence right now. But it's just so funny how, especially when you're down, and I think that's what happens to me, is I take a trade and it goes against me. And rather than saying, okay, well, I went short, but it's going long, so maybe I should either scratch that trade, hedge that trade, or start trading in the long direction. And so what happens is I don't, so I look for another short, and then I get bit, or I look for a long, and then I get bitten again, and then it just keeps happening. And then what happens is it starts going my way. I start peeling the trades off instead of leaving them alone, when I'm saying, you know what, it's going to do a 50% retrace on the fibs, like the pound dollar just did on M5 last candle. And so then I got this other story I'm telling myself, and I just kick myself for being stupid. All the way, against me. It's like all the way up it was against me, all the way down it was against, I did things where I just, I really should know better, but I just didn't act accordingly. And that's the big thing. Stupid is not acting accordingly.
Right. Yeah, I'd agree with that 100%. And again, if you think about it, it really comes back down to exactly what I was saying. Maybe in a little bit more a different path of getting there, but it's basically the same thing I'm saying, and that is that we have rules, and we have rules for reasons. And the problem is, if you're not trading divergence, why are you looking at divergence? It's not part of your rule set.
Well, it's just I'm not looking for it. I just see it. It's like, oh,
right.
Yeah.
But the thing is, let's say you're in a trade already,
right,
and you see divergence, okay, but divergence isn't part of your exit playbook,
right.
Even though you see it, but every other reason that you're in that trade, why you think it's good to stay in that trade, is still there. Then shoot, stay there.
Right.
Now obviously if there's something that's just obvious, everything that in the entire world about trading is saying get out. Well, obviously get out.
Yeah. And you know what, Walmart?
You can't be stupid about it. We're at time.
Yeah, speaking about getting out. So, fellow traders, we're going to continue this. We'll probably have part 2, part 3, and part 4. Sometimes you're smart, sometimes you're stupid. So, just keep that in mind when you're trading, because it's not what you trade, it's how you trade it. So, go out there and drain the banks. This is the Rumpled One, over and out.